Our next guest, Sarah Hewin, senior economist at Standard Chartered Bank. Thank you very much indeed, Sarah, for joining us. So we've had Fed Chairman Ben Bernanke express caution in light of disappointing data coming out of the US this week. On the other hand, Jean-Claude Trichet has been a little more optimistic. Do you expect to see further evidence of this transatlantic divide, if you like, at Jackson Hole today?
Well, it's clear that from the euro area, the data are holding up well, and of course, we're likely to have confirmation today that the split between second quarter growth in the US and second quarter growth in the euro area was even greater than originally reported. The news, of course, from Germany continues to be good. There's a split within the euro area, so several of the peripheral economies are struggling. So it's not a single story for the euro area, but undoubtedly President Trichet probably has more to be happy about than Ben Bernanke does.
And I just want to pick up on something you said there, because when we speak about Europe, it's not a monolithic recovery. It's not a single story, as you say. We're seeing very much a two-speed recovery, where you've got a stronger Germany, stronger northern nations versus the weaker southern periphery nations. So with that in mind, what can we expect from Jean-Claude Trichet? What sort of tone can we expect him to strike?
Well, I think that he'll reiterate the sort of cautiously optimistic tone that we heard at the last European Central Bank meeting. So it's clear that the ECB expects another strong quarter for the third quarter growth, but also they're pointing to headwinds facing the euro area economy, including, of course, weakening growth in trading partners, including the US. And also there are problems with the banking sector within Europe, and not to forget that next year fiscal tightening will encompass all of the euro area economies, and of course the UK, not to forget that part of Europe, which is also pretty significant.
Now, Sarah, what indications are we likely to get from the Fed on monetary policy?
Well, I think the Fed will continue to indicate that they're taking a very pragmatic approach. They're going to follow the data. The revision to today's data will be important, but of course it's very backward-looking. We continue to have rather weak readings, particularly from the housing sector in the US, particularly, I guess, from employment. The consumer, we know, is very cautious in the US. So the Fed's view, I think, is going to be let's see how the data develop. They've made it clear that they'll ease further if that's required, and indeed that's what we expect that they will have to do by the first quarter of next year.
So we won't necessarily get anything concrete from Bernanke on further stimulus measures?
No, I think that it's still too early. They'll want to see how the data develop over the next few months. Inflation, of course, I don't think is going to be a problem at all. So it's very much what happens to the data in the coming months.
Thank you very much indeed. Sarah Hewin, senior economist at Standard Chartered Bank. Appreciate your thoughts.